Hi, this is Michael Regan with the Regan Team Home Loan Group, and here's your weekly real estate roundup for May 12th, 2026. First, the ADP jobs report. So it showed that 109,000 jobs were created for the month of April, which was actually really good news. We'd seen much lower numbers and it did beat market expectations. And then into the big BLS jobs report, that came in at 115,000 jobs created for the month of April, and the unemployment rate stayed steady at 4.3%. Now, there were negative revisions, like I had talked about last time this report, that there most likely would be, and there were negative 16,000 revisions between February and March. And the biggest thing is we're seeing numbers that are definitely muted because pre-COVID, we used to see these job reports over 200,000 week or monthly. And so, we've been seeing 100,000 and under for quite some time. So it definitely shows we have a changing jobs market. Then into the consumer price index. So this is one that's going to be nasty for mortgage rates. So the consumer price index, the headline jumped 0.6 month over month. The core jumped 0.4 over month. So now the headline's at 3.8% year over year, and the core is at 2.8%. And gas prices, obviously with the war in Iran, are not helping us at all. Even with inflation headed up, existing home sales have been doing very well. So we were up 0.2 month over month. We are flat year over year, but the median home price is up 2.1% month over month and up 0.9% year over year. Now, a balanced market is 4.6 months. We only have 4.4 months supply. So that's why you're seeing in still a lot of areas where you see multiple offers, because in many cases, it is still a seller's market. And then in new home sales also surprised the market, showed 682,000 new home sales for the month of March. Month over month, it was up 7.4% and 3.3% year over year. So even with, again, the elevated rates, inflation, all that, you're still seeing a ton of demand in new home and existing home sales. And then in PCE, so this is the Fed's favorite measure of inflation, and it showed that the headline jumped 0.7% month over month and 0.3% in core. So the PCE, the headline is at 3.5% and the core is at 3.2%. Again, rising gas prices not helping us at all. Now into what the market's doing today. So we're down 32 basis points in the Fannie Mae 30-year fixed, and you'll see the chart. Red is bad for rates, green is good. Well, ever since the war started, we've seen a lot of red. We were kind of rebounding because there was a lot of thought in the market that we would come to a resolution in Iran, and now that we haven't, well, you're seeing a lot of red. And so with the latest peace deal not really looking like it's going to come together, oil prices going up, CPI, CPE, all those things not looking so hot, rates are going up. Now, that being said, rates are still a ton lower than they were several years ago. I mean, we were over 8% at one point. And no matter what, we're still seeing strong demand for housing. So even with all these things going geopolitically, we still have a strong housing market overall. That's it for this week's Real Estate Roundup. And don't forget, we specialize in cash flow loans for investors and self-employed business owners and reverse mortgages for seniors. Have a great week.